Markets have settled in the green thanks to some positive cues we're getting from Asia, and the mid-caps are still nose ahead with about 0.5% in terms of gains. Okay, it's now whittled down to a 0.3% gain, but watch the space. Yesterday we did see the Nifty unable to hold on to that 8450 mark. It has repeated that in the first 5 minutes of trade, went on to 8455 and it has recoiled from there. So kind of bending and buckling under its own weight at this point in time. Has risen a great deal, put on a lot of weight, so can it hold? That's the question we will be asking Dipen Sheth, Head Institutional Research at HDFC Securities, who joins us now as a market master. Hi Dipen. Good morning. That really is the first question. I mean, do we have enough good news to get there, to get to new highs continuously? Is liquidity just not drying up?
The simple answer to that is that these answers, Lata, they don't change in a matter of weeks, especially when you have such a big thing as a 5 or arguably a 10-year bull run staring at you. So the thesis remains unchanged. The country is headed for better times. We've got a new government. It's doing mostly the right things. A lot of levers are being moved. All these levers of Hindustan, as we might want to call them, are going to take a while to get moving. A lot of them have been put into action, and we will see incremental and not so incremental changes play out. Markets are a different creature, so they'll get a little excited about things at times. They'll get a little disillusioned. So we'll see consolidation. We'll see a little bit of a sell-off here and there. And to my mind, I think again, it's risky to take a short-term view, but I do feel that we've seen almost a linear run-up in the last few weeks. So maybe a little bit of consolidation, 200 or 300 points of the Nifty getting sold off doesn't change the thesis, but yes, technically maybe. So I'll leave it to the chartists out there to figure out.
Well, since we have reached some level in terms of valuations, what would you bet on in the Nifty itself? What's this massive bull run, say the next 12-month bull run, looking like, and which are the best stocks to play in the Nifty?
Lata, there's been an across-the-board move already. So I think the challenge now is to figure out what can happen between now and the next 12 months, which will influence valuations and reported profits in the Nifty companies. So you've seen the oil marketing companies go through a big reset. The PSU banks are in the throes of a massive reset, again based on an anticipated recovery in overall asset quality. I think there are some challenges there. Also, interest rates falling off can't be taken for granted, at least over the next 6 months, as has been well discussed. To my mind, there are some parts of the Nifty and indeed the large cap companies where people are still not building in a significant crack in commodity prices, which is now a globally accepted phenomenon and which is played out and which is still to be factored into people's numbers, because there is some disbelief on whether those raw material price benefits will be retained or passed on. So here I would look for companies with very strong pricing power, people who are in, let's say, the FMCG space. Are they going to gain? So I don't see Lever, for example, or ITC benefiting so much from falling commodity prices. Lever, yes, but ITC, no way. But look at a company like Asian Paints. The consensus view is it's a great company, but 36
times.
F16 consensus earnings, or at least our earnings, based on at least 20% profit CAGR in the next 2 years, 15 and 16. But to my mind, 36x is an optical illusion. Asian Paints is running at 16% or thereabouts, 15.5%, 16% EBITDA margins. Fat gross margins. And what happens if phthalic prices fall? What happens if titanium dioxide prices fall? They are falling in any case, but what if they fall? And what if Asian Paints, in the middle of this 100 smart cities and new construction and urban revival, is able to retain its pricing power? That 36 might come down to 26, and you will see broker reports screaming buy all over again. Right now, everybody is kind of looking at Asian Paints with caution. So there you are. That's one example. Another example I can think of, again linked and directly, completely to crude prices. And I see crude prices falling maybe another $10 from here. In fact, that's the consensus view if you look at global analyst stakes. And sure, things can change there, but look at a company like Castrol. Now, should I put it into autos, auto anchs or something? I think it's an FMCG company. Look at a company like Gulf Oil Lubricants, which is the demerged and the sliced out arm of Gulf Oil Corporation. Now it's a pure play. Both these companies are pure play lubricants players. Consumption likely to take off with auto and MHCV revival. IIP revival will drive industrial consumption of lubricants and what have you. So they might both look costly. You know, Gulf Oil looks at something like, I think, 25x. Castrol is trading for 40x trailing earnings or some such number. But what if margins were to expand? What if volume growth were to come back? Castrol has been lagging on volume growth for a while. What if volume growth takes off? And these companies are all at 60, 70, 80% ROCs. They don't need capital to expand. They've got strong pricing power. Raw material prices fall off. And suddenly valuations will look sexy all over again.
So these are the crude price fall drives these stocks, but Dipen Sheth has driven Gulf Oil and Castrol up. I mean, in his disclosures.
So we are brokers. We don't buy, we advise.
Okay. Well, you know, the other stock that you've talked about is Mangalam Cement, and there's been a lot of foreign funds chasing this stock. So I was looking at the chart. It's gone up 200% this year already, and even the numbers look quite good.
Yeah, I know where you're coming from.
Yeah.
So in Mangalam, I think the thesis. So okay, let's put it in the big picture of us being more than averagely bullish on North India cement. Okay, so that's a market which is not going to go away in terms of excitement in a hurry over the next few years. So there is a South India thesis also, and pricing power seems to be coming back there. But look at the context of North India, the kind of capacity adds and the kind of incremental demand that we see, and we actually see a super cycle of sorts playing out in that part of the country. So you'll see a few hiccups, and the rainy season saw some price let-offs and so on. In Mangalam's case, much like in Orient's case, which is stock we've been pushing, you've already delivered something like a 60% capacity hike on a very small base, 2 million tons going to 3.25 or some such, and distributed grinding also coming up, giving you flexibility in operations. Low promoter holding, hardly any FII or FI holding. $60 even currently after this huge run-up. So it was trading at $30 not so long ago. $60 a ton when a North India player like Shree is trading for 200. So okay, let's not compare. And Shree is a cost leader for years, and they've done this money multiplication over a 2-decade period, with starting with 1 or 2 million tons and going to 16 now and maybe 20, 25 in a while. So why can't Mangalam do part of this at least? And at $60, what's there to lose? There's just, in 2 years' time, there'll be less than 200 crores of debt on the books. The expansion has been done at an attractive cost. Valuations are in your favor. The market is fine.
So we are speaking to the management, you know, within the next 1 hour. If you had one question to ask the management, what would it be?
So that's the question that every equity investor would ask them. What now? You've got 3.25 million tons added. Now, what is your incremental capital allocation going to be like? Where is it going to be? What kind of capacity will you set up? And most important, at what cost will you be able to do this?
Right. Usually they don't share costing very easily, but yes, we'll try and get that as well. Okay, our Money Control viewers have asked a question. You have the option to take it or leave it. The message board question is Ravi Prasad writing to us from Kolkata. He says he owns 800 shares of IDFC and wants to know if he can get the kind of returns that one has got from HDFC Bank and ICICI Bank over the last 10 years. Fair question. He's asking you if IDFC Bank is going to give the multi-bagger returns that these two private banks gave.
There's no reason why it can't. So again, and I don't even want to make a shadow comment on a group company such as HDFC Bank, which is our parent. We're a subsidiary of the bank. But yes, to my mind, it's a great management. They're setting up a bank. The arithmetic on how the bank will be set up, and you know how the balance sheet is going to be divided, and how you'll get shares in the listed, shares in a listed bank in a while is going to be clear. It's not apparent to me as to how long they will take to get core banking operations stabilized, growing, and up and running. I think they're a very high quality management. There's no need to anticipate a stumble here by any stretch of imagination. Whether a very large bit of value creation can happen depends on how they get their deposit franchise right and how they get their lending mix right. So the jury is out on that. You know, I don't see them not being able to do it, but I don't know what exactly they will do in terms of business mix. So it's difficult to take a call there.
So you're not betting, you
No,
don't want
we're
to
not
give
gung-ho.
Ravi, whoever,
not
the confidence that it will.
So as a research house, we respect the management a lot. We think they are very gifted people. They've had a tight fist during some really tough times for the infra lending sector. They've held back growth in their books, and they've held on tenaciously to asset quality. I think all of this goes in their favor when they become bankers in the proper sense. So yes, there's a lot of hope and expectation from the management. I think valuations are middling right now. So there is scope to make money, but we don't know exactly how.
All right, Dipen, we leave it at that. Thanks for joining
Thank you.
us and taking us through all your ideas.